Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab, and we are here to talk turkey today. So I'm going to talk a bit about rules. I'm going to talk about trading plans. I'm going to talk about the voices in our head. I'm going to talk about the psychology of trading and why it's so important. We're going to have a little bit of a, I would call it, a bit of a come to Jesus moment here. I've got James Boyd with us in the chat. He's a friend and fellow coach. And he talks about these topics a lot too. So, they're important when, the Boydistas are getting talk about the psychology of trading and the voices in our head. And I want to start by saying that not everything we think is true. And there's a reason that we're going to talk about that today. Now, if you are not following us on X, you are missing out. So Barb Armstrong CS and James Boyd CS. So get thee over to X and hit the follow button. You can also now find us on LinkedIn. And so you'll see the instructions on how to do that if you're watching in the archives and the show notes down below. There was a survey in the chat last week. I'm going to talk a little bit. I'm going to cover some of the questions that came out of that. So we have a lot to cover. This is an active trading class. So in this class, we place lots of trades and we manage lots of trades. And so let's get right down to it. No, we do a lot of option trades in this class and know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform, which is a great place to learn and hone your skills. Make sure you have a plan, you understand it, you understand how to place the trades on the Thinkorswim platform, and then how to exit those positions. Know that there are some nuances and differences between Paper Money and a live account. The most important one for us in this class is that short option positions will never be assigned early. Now, if we were talking about how to invest in dividend stocks, know that in a Paper Money account, there are no dividends paid either, but that's, less appropriate for us in this class, or it's less relevant, let's say. If you have never been to an in-person event, I would highly recommend it. I love in-person events. It's how I got introduced to the world of trading. And they still have a very special place in my heart. I will not be at the New York event at the end of August, but Kevin Horner and Ben Watson will be there along with the live event team. And, it's in the heart of New York. So you can embrace all that New York has to offer in addition to being part of this 2-day event. Then we'll be in Scottsdale for a market drive in September. Kevin and I will be there along with Ben. I'll be in DC as well. The first day is intro to technical analysis, and the second day is intro to options. And, if you've never been to a live event, it's free to register, free to attend. We'll even pay your parking. We'll have a coffee on in the morning. We'll have breakfast. We'll have lunch. And at the market drive, we even do a really nice reception at the end of the day. So if you want to immerse yourself in, this world of trading and trading education, you can go to schwab.com/events and get registered. Okay. Now, if you are brand new, and I want to thank all of the usual suspects who are here, each and every Monday and Friday, and who are so participatory in the chat. But if you're here for the first time, feel free to type a greeting into the chat so we can welcome you. We do a super quick market overview because first thing this morning, Kevin Horner and James Boyd spent 45 minutes doing a really detailed market overview. And you want to take advantage of that. 4 days a week, Kevin kicks off the trading day with trader talks, and you'll want to do that. So then we focus on placing new example trades and managing existing trades. And today we're going to talk a little bit about our psychology in the world of trading also. So if you have not, just a sec, bringing up the wrong tool. If you haven't been to this class before, we started the year with 25,000. Okay. And our max position size is 5,000. And some might say, like, are you crazy? That's 20% of your starting account value. Yes, it is. But we wanted to be able to do buy right covered calls and stock positions, and that was the decision we made. Now, if you have $1 million account, you might say, I don't want any one position to be more than 5%. And that's totally valid. And at 500 as our max risk per trade on 25,000, that's 2%. And again, if you had a much larger account, you might say, like, I only want this to be half of 1% or 1%. And we haven't, even though our account has grown, we have not changed our max risk per trade or our position size. Okay, so, and I'm stealing a line from my friend Kevin Hinks, but as he likes to say, he's in the moving business, not the storage business. And so our focus here is on shorter to intermediate term timeframes. We aren't doing longer term buy and holds. And Paul is saying, why is a dividend play not relevant to this smaller account? It's because of the way we tend to trade this account. We aren't looking to build as much a buy and hold portfolio. And the idea behind it kind of being, well, that's just the way we've structured it. But like, some people might have a really large portfolio and might actively want to trade a smaller piece of it to generate some income. And so our goal in this class, when we started the year, was to earn $100 a week. And some might say, like, that's pretty aggressive, Barb. Like, so that would be $5,200 over the course of the year. Which, if you're a math person, that's about a 20%. Our goal was to gain 20%. And we had achieved that, by the end of March, might have even been sooner. So we said, okay, we're going to up the ante and we're going to make our goal 200 a week. And the reason I picked that is because somebody said that's absolutely ridiculous. There's no way you could make $100 a week over the course of the year. And I thought, well, let's make that our goal and see how it works out. So then our goal became to earn 10,400, which is pretty lofty. Okay. And so to the first timers here, like, congratulations for showing up and welcome. Okay, so this is where we're sitting. This is our goal now, which, if you started with 25,000, then that means your goal is 35,400. Okay. And this is just a goal. And this is like paper money. There are some advantages with paper money. And what are the advantages? Well, sometimes you get what we call a paper money fill, which means that, you might get a more advantageous fill than you might get in a live account. Also, I don't think we pay expense, the transaction fees for options. I don't think those count. But if we come over and we look at our account, we're now at 30,000. And I'm pointing this out for a reason. So we've made our first goal of being up 5,200. But on Monday of this week, I could have thrown my shoulder out for patting myself on the back because we were almost at 34,000. I thought, we're close to making that second goal of $200 a week. And then this week, well, it just stunk big time. Like, we're down to 30,428. What? Like, we're down 10% from Monday to Friday. So this week totally sucked. And I'm pointing this out for a reason, because then the voices in our head, the itty bitty nitty committee, start saying to you, well, you know what? What, were you divinely uninspired? Did you not follow your rules this week? Is it the market's fault? It's like, were you not following your trading plan? Like, what's going on? Maybe you're no longer good at this and you should just, like, pack it up. And that's why I said at the beginning, not everything you think is true. But I wanted to point this out because I've been doing this for a long time. Like, I teach this stuff And I don't place trades that I think are not going to work out. And we had not a good week this week. And so just because you have a bad week doesn't mean you should throw in the towel. Okay. Yeah. And I know I'm speaking in very colloquial terms here. But there were three mistakes made that I could find. Okay. And I want to point them out. So one is on a trade that went really quite nicely. So if we come and we look at Verizon, or was it Verizon? No, it was Coke. So we had two trades that we got out of, and we don't want to go back 200 days. So we had a short put vertical that we got out of on the 18th, which was Tuesday. And we got in for 33 cents and we got out for 9. Now, this trade was not placed by me. It was placed when I was away, but I could have made this, same mistake. Oh, shoot. I keep going back to the wrong drawing tool, which has decided to take Friday off. It started the weekend early. So on this one, we made how much? We made 24 cents a share or $24 a contract. What was our return on risk? How much were we risking on this thing? Well, this was a $1 wide spread. So we were risking $1 minus 33 cents. That was our risk. And we made 24 cents. So this is $1 minus 33. We made 24 cents. So our return on risk on this thing was 35.8%. So, we would call this a base hit, but we were risking 67 or $67 per contract. And what's our max risk, or our position sizing would say, we're willing to risk $500. So we shouldn't have done one contract. We should have done 7. And had we done 7 contracts, we would have made $168. So we made a mistake there. It was still a successful trade and we still made some money, but we made a mistake in that we didn't position size appropriately. Okay. Okay. Now, like somebody's saying, if your account and your nervous system survives drawdowns, you're doing great. And this is one of the things that when you do have this conversation with yourself, you want to look back and go, did I make mistakes? And if I did, let's make sure I don't make those again. The other mistake, well, let's review the other trade that went well, that we got out of today. And that was, or this week. And that was Verizon. So we did a short put vertical on Verizon and we got out of that. And this one we did position size appropriately. So we sold it, we got in for 29 cents, out for 8. Where did my drawing tool go? Annotate. Here we go. So we made 21 cents per contract, or $21 times 7. So for this one, we made $147. So that was our base hit, and we were happy campers on that. And our return on risk on that, so how much were we risking? $71 a contract. So we were up by 29%. So that was 21 over 71. Now, the other mistake, so we made one mistake where we could have made more money and didn't. And then the other mistake I made was on and this one I made, ASX. So we were doing a trade with 5 contracts, and I think I thought it hadn't gone through and put it in again. And we did 5 contracts, which meant we were risking $550, and we did it twice. So now we're risking $1,000. And we're down 10% from Monday to Friday. But imagine if we started thinking our position sizing rules didn't matter and had started, upping the ante. We could have been down twice as much. And instead of a flesh wound, we're now in intensive care. Okay. So, and so on this one, we're down $525 and we should be down half that. We're down 47%. So let's look at the chart on ASX. This is not looking good, my friends. And so we could just exit this position, but I mean, we need to correct the position sizing, which kind of sucks, when you're down to lock in a loss, but we need to at least close out half of that. And let's look at ASX. So we only have one exit in place here, which is interesting. So, that was a mistake. But if we'd caught it the same day, we would have been okay. But, when you look at the chart, we put the trade in on Monday and on Tuesday, it went down. And so we're going to come back to our monitor tab and we're going to correct this by creating a closing order to sell 5 of these. And here's something that I thought about when I had this conversation with myself was like, so if I made this mistake, like, do I add some money back to the account? Because it's paper money, so you can add money to the account at any time. But if you made this mistake in your live account, you're suffering real consequences. And we're trying to simulate real world here. Okay. Yeah, so somebody said paper money has a habit of double fills, but like this could happen in a live account also. Okay, the other thing that happened, we now have a naked call. So how much risk is in a naked call? We sold a call and we no longer own the stock. How much risk? I want you to type that into the chat. How much risk is there with a naked call? So you can see here, we no longer own the stock, but we sold 2 calls. So there's unlimited risk. How much risk are we willing to take? Well, it's not unlimited, my friends. And so what happened yesterday was that we got stopped out on KeyBank. So let's go look at the chart. We got stopped out on KeyBank. We had put in a buy right covered call. And if we come back and look at this, you may be saying, well, we made $97. We did. So we're going to buy this back. Now let's see if we can get it for 13. So this is not, the type of mistake you want to make. And as soon as you see it, you want to correct that because unlimited risk is a real thing. But if we come and we look at Key, and the reason that I had 200 days in here, which I seldom do, was so that I could go back and see when we first bought this stock. So we bought this at the end of June. We sold a call for 20 cents a share or $20 that expired worthless. And then at the beginning of August, we sold another call. Another call was sold for 61 cents. That was the day of the Barb 3.0 project that ended up not happening. But so we sold another call, which is a cool thing. But then when we had a stop in that didn't include the buying back of the call, and that was executed yesterday. Okay. So at the end of the day, like did this not work out? Actually, it didn't work out that badly. So we sold the stock for 23. We got out for 21.83. So we were down on the stock piece $1.29 a share times 200. So we were down on that to the tune of $258. And then that was alleviated by the calls that we sold. So this one we made $40 on, 20 times 2. So we made 40 bucks on that one because it expired worthless. And on this one, 61 minus 13, we made $48 a contract. So that's 96. And this is where like the covered calls kind of, it didn't eliminate the loss, but I now take 258 and we subtract 136. It cut it in half. So we were still down, but now like it's a scratch. I wouldn't even call that really a flesh wound. Like the other team got a base hit. So I don't want to belabor this point, but if you're following your plan and you're following, you have a plan and you follow it, and even when you have a bad week, it can help. So just clear all drawings. Now, there was one other thing I wanted to point out because we did have a survey on Monday and somebody said you kept referring to these example trading plans and I don't know where they are. And I point them out a lot. I guess I didn't on Monday. We are going to look at our focus today will be on short put verticals, but we do a lot of long call vertical trades also. And so here are example trading plans for both of those. With KeyBank, we had done a buy right covered call. Here's an example trading plan for that. We do long calls with one ATR targets or, swing trades. So we do all of this stuff. And so here's a bunch of example trading plans. Now, I'm also going to talk about a scan today. And if you haven't, here's a quick and easy way to create sector watch lists with scans. So if you don't have that or missed it last time, here's a quick video on that. And then we're going to look at a lot of candle patterns today also. And if you're new to technical analysis and new to all this stuff, here's a bunch of short videos. If you're tired of binging Netflix, you can do some binge learning. And most of these are in that 2 to 5 minutes long. Okay. So when I talk about a, bullish Harami pattern or a hammer or an inverted hammer or this bullish Harami or that kind of thing, if you're not familiar, you can come to this. This is called the Trade Management Mini Sessions. If you haven't subscribed to Trader Talks, it's free. You're going to want to do that. Okay. So when we come to our charts and, we look at the S&P 500. So you may say, well, why have we been placing bullish trades? Well, the market is within a stone's throw of all-time highs. And today, when we come in and look, we had this diagonal resistance breakout. It's come back to retest. And today we have this bullish Harami. So when we're close to all-time highs, it's hard to say, well, the market is now bearish and I'm going to respond accordingly. And even though we had this diagonal resistance breakout on the NASDAQ, which turned out not to be a breakout, but appeared to be a bit of a fake out. It's come back to the 30-day moving average or the 20-day and appears to be bouncing. And when we look at this compared to all-time highs, is it that far off the mark? Well, it's down 4%, but so we may want to be cautious about where we're looking. Somebody said like consumer discretionary tends to be trending well lately. So, I've brought up the S&P. This is a public watch list, the S&P sector indices. And so when you see this and also in that section, there's a way to add scripts. And I've done a little video on that if you don't have them. But when we look at the last month, consumer discretionary, number one, it's had a pretty good last 4 weeks. If we look at the last 3 months, healthcare, and I know James has been beating the drum on this and, just making you aware of like, if you want to run where it's hot, where might you be running? Well, a lot of healthcare stocks are strong. But if we want to be kind of cautiously optimistic and we're looking to do short put vertical trades, which are, I like to say, kind of sort of bullish. They're bullish to neutral, you know, here we have something bouncing off a 30-day moving average. And here's the 20-day moving average. And I brought this up because Kevin and James talked about this with respect to the financial sector. Like this sector, since it crossed this line at the beginning of June, hasn't gone below the 20-day moving average until yesterday. And then it came through and it looked like, you know, it broke through the first floor and the 30-day moving average caught it. And now we have this bullish harami pattern, you know, happening here at a potential support level. But some might say, well, I'm going to feel a little better when this goes back above this 20-day moving average. And I usually have a 10-day moving average on my chart. I put the 20 in here and I made it green just so that I'll remember that this is, you know, not a 10. You know, it's a 20. But, you know, that sector's been strong. Healthcare has been strong. Consumer discretionary kind of coming back around the corner, but still a ways off its highs. Some might say is setting up a bit of a pennant pattern, maybe. You know, so we'll see. Okay, so what do we do when, you know, if we're looking at this and we're looking for opportunities? So you can just do a scan and you can come out here and say, I want to look at the S&P 500. I want to intersect it with, and then come down to by industry, the financial sector. And you know, somebody had posted a comment the other day in one of James's classes and said, like, what sector are airlines part of or transportation part of? It might have been in Kevin's class, but you know, if you come here and look, you can see all the industry groups that make up a sector. But so here's our financials, and we're saying just pick all of them. And there's 73. And then, you know, we can do this scan, and then we can come up here and save it. And I've already done that. So, and I've created a personal watch list for every sector. And then when it runs that, it runs it. And if there has been a change in the S&P 500 and someone's been added or someone's been given the boot, you know, it will, you know, add the new players and kick out the old. And so if I said, okay, I've now linked this to my chart and I can just start kind of clicking along. And so we got to BlackRock and said, okay, well, BlackRock, you know, and if we back this up a little bit, you know, it was kind of having a tough go of it, kind of like this, you know, either triple bottom or head and shoulders on a bit of a tilt, and then it broke out and is moving to the upside. Like, might there be some potential there? Now, this is a really expensive stock. And remember, you know, we have a small account, but could we do, and we're trying to be modestly optimistic. So could we come in and do something? Let me change my drawing tool along here. This below 1139, do a short put vertical while something's bouncing off a support level. And so if we come out here to the monthlies, and we wanted to be what, 1130? Where was it? Okay, we want to be below 1140. You know, so 1130 would be nice. Well, we have a $3 bid ask spread here. Well, $2 and, you know, $2.20. That's a full 10%. And then if we look at it, these are $10 wide. And I can tell you without even checking it out, if I do a $10 wide vertical, I'm getting 360, which is really quite nice. But the downside is I'm risking $10 minus 360, which is $640. Is that more than 500? Yeah. Is it more than 550? Yeah. So can we place the trade? We can't. We can't place that trade because it breaks our position sizing rules. And so what do? We move on. And you might say, well, if I'm really bullish, like, could I do a a long call vertical. Well, we want to be more modestly bullish. And so we're saying, yeah, no, we don't want to do that. So we're moving on. Okay, let's look at Capital One Financial. And again, like I just started clicking through, from one to the other. It's like, oh, okay, well, when I look at this, it's up 20% year to date, kind of like teamed up with Humpty Dumpty and had a great fall. But then we had this diagonal resistance breakout. Now, some might say, well, I could see this maybe being, a bit of an inverted head and shoulders setting up, and it's not quite there yet. Others might look at it and say, well, that's what you're seeing, but I see this diagonal resistance breakout and it's moving to the upside. And again, this is a $300 stock. But if we're saying, I see support, kind of around this 280-ish level, it's now at 301. Could I do, if we wanted to do a short put vertical trade, could we come out here? The delta on this is 22. And our rules say we want this to trade more than 1 million shares a day. Oh, I'm on CBOE. I wanted Capital One Financial. Was I on the charts? Yeah. Okay, so when I come to the trade tab, Capital One Financial, okay, that makes more sense. I don't know how that happened. Okay. Sorry, guys. Let's stick with our Capital One Financial. So we've done some other trades here, that have worked out, and we can, take that one off now because it's a new day. So we're going to remove these. But when we look at this and we say, well, we had this double bottom or cup and handle, it broke out, came up to retest. But if I'm selling a short put vertical, I'd want it to be around what? The low here was 211. So it's probably going to be a $5 wide spread. I'd want it to be at 210. And so if we look at that and we go, oh, okay, well, it's 28 days. We've got 1,300 contracts. It trades more than 1 million shares a day. So that's good. Bid-ask spread, 10%. That's good. So could we sell this vertical? Well, we get $2. And again, this is $10 wide. So we're risking $8. This is 210, 200. So we can't afford to do that. So can we come to the weeklies? So this is where we might say, okay, well, what if we came to September 11th? So that's 3 weeks out. And could we do the 210, 225 to 260? We don't have enough contracts. This is 35 cents. That's more than 10%. It's a little too wide for what we're looking for. And so, do we try and make it work? Sometimes we just, sometimes you have to know when to hold them and when to fold them and just say the bid-ask spread is a little too wide. I don't have enough contracts to meet my trading plan rules. Yeah, so Carla is new and she's saying, if you wanted to do a debit spread, how would someone do that? I'm new. And we did a whole bunch of debit spreads in the class on Monday. And so you can go and watch that one in the archives. Okay, and James will put a link to the archives, link to the playlist for this class in there. And that's, again, if you go to that same page, other than there's a trade management mini session playlist, there's one for trading a smaller account. Yeah, so that was Capital One Financial. So thanks for pointing that out. Another one I looked at was Ameriprise. So when we look at Ameriprise, like this has been uptrending, pulled back. We've got, again, this bullish harami. And if you're new to technical analysis, this is considered to be a complete pattern. It's a bullish pattern. We don't have to wait for confirmation. But again, an expensive stock. So if we said, well, and if we want to be, you know, kind of sort of bullish. So the deal with a short put vertical, if you're new to this strategy, is that with a short put vertical, we're selling a put. Now, when we sell a put, we're saying, hey, if you'd like us to buy this stock for 540 bucks a share or whatever we've sold that strike at, we're happy to buy it. We don't even have 54,000 in our account, let alone liquid. And so to define our risk, we're going to come down here and buy a put, which gives us the right to sell it. So if we did the, say 45, and it's probably going to be $10 wide and 540, then we're risking $5 less whatever we get paid to get in the trade. So, if it goes up, we're winners. If it goes sideways, we're winners. We can even be a little bit wrong and we can still have a profitable trade, but we've defined our risk. Okay. Yeah. And when the bid-ask spread is too wide, the problem is it can be difficult to exit the trade for a profit. And that's why we have that rule. Like, you have a rule for a reason. Now, the first thing that makes you nervous is when you come and you see it only offers monthlies. And then when we come over here, and Ameriprise is currently at 149,000. Well, that's really low. You look at the day before, 300, 400. Our rule is we want this to trade at least 1 million shares a day. This one doesn't. So, like, we're out of the running for Ameriprise. And then if we come and we look at the bid-ask spreads, I mean, you could drive a truck through them. So, like, there's another one. Like, the chart may have looked interesting, but no cigar. How about MasterCard? So when we look at MasterCard, I mean, this was going sideways for a while, broke out, continued to the upside, up again today. And could we look at, if we look at a current support level, maybe around this? And some might do this based on probabilities, and some might say, I like to look at the chart. So I'd want it to be below, 555. And it's trading at 580. So we may not be able to get enough premium. Like, if we come out, so here the bid-ask spread is too wide on the weeklies. If we come out here, 380 to 470, the bid-ask spread is just too wide. Like 90 cents on a $4 option, that's like over 20%. And so it's important to know when to hold them and when to fold them. But if you were really bullish on this, could you do, and here's one way of looking at it, saying, well, it's already at 580. If I just wanted it to stay here, could I do a long call vertical at 575 and 580? It's already through both strikes and you're paying 285. But if you're thinking, well, the market could be going through a period of consolidation, we're close to a high here, it could pull back. If you wanted to do a strategy that's more bullish to neutral, even though this is a possibility, you might say, I'm going to err on the side of caution. Okay. Yeah. And so I really wanted to talk a bit about that. Like, and here's another one, AIZ, Assurant. And so, this is up 17% year to date. We've seen this nice uptrend. It gapped up on the last earnings. We can come here and look at live news, say, like, what are these the analysts raised a price target, Morgan Stanley to 320, UBS to 331, from 274. Like, that's a big, like, 330 is way up here. But this is the first day of a breakout. Could it be a fake out? And it could be a fake out. But if you said, well, if you've done your homework and you believe in this company, you might say, well, I'd be willing to do shares, maybe buy a few shares and put a target of, do a swing target. So you're not in it for a long time. you're just in it, you're just looking to make a little gain. And the benefit of this is that you're close to a support level. So your risk on the downside is going to be more modest, perhaps. Or, could we do this as an option trade? Well, when it only trades monthly, first sign that, it's tough. And then bid ask spread, these aren't really tradable options. So we can't do that. So then, might we want to do a stock trade? And it's bullish, but we have the advantage when we buy the stock of time. We aren't suffering from time decay. And we have a different set of rules. Now, oh, how many has this traded? 85,000? Well, in an average day, how many does it trade? Oh, this was, 442, 283, 3. This is a little light. So some might have a rule that says, I only want to trade things that trade 1 million shares a day or more. With a stock, you might say, I want it to trade at least 500,000 a day or more on average. And this one doesn't do that either. And so we might just have to say, you know what, we're not doing this because it doesn't meet our volume requirements. So, and Johnny had pointed that out. Yeah, let me just go and look at the chat. And sometimes like it's just so frustrating, right? Because you're looking at it and you're going like, hey. So Dennis is asking if I have a class on how I created the scans for each sector. And the answer is yes. I had that. If you come back here, there's a little 10-minute video on how to create those scans. Yeah, right here. A quick and easy way to create sector watch lists using scans. So yeah, we did have that. Where are the trade rules for this class? So the trade rules for this class are under the trade management mini sessions. And I've created, and I'm going to work on another one. I'm going to work on one for an iron condor today. I also need to work on one for a swing trade that we can do with stock or with options. And they'll all be in here in this kind of royal blue. Okay, so these are our trading plans. And rather than creating a new example trading plan, this is something you can go and watch and then use it as a format to create your own trading plan. Yeah. Oh, and then just so you have it, when you come out, if you come to trading a smaller account, if you just scroll through, here are the trade management mini sessions. Sometimes I can't see for looking. If you're new to technical analysis, I teach you getting started with technical analysis. James teaches something every day. So if you're a fan of James, and if you're not, like, go watch, if you haven't watched any of his webcasts, you need to do that. So this was 4 bullish trading strategies, and one of them was a long call vertical. So you can come back. So if I click on this, it'll bring it up, and I'm only doing that so I can share this for the person that asked for it. Okay, so this class was relatively unique in that this may be the only class this year where I didn't place a trade. So yeah, okay, let me quickly come to the monitor tab. We're out of time. And we'll look at trades on Monday also. So our trade on Path, we're up 34%. Somebody asked me to look at Path. We had a target on this. So according to this, we should be out of this one. So I'm going to exit that position and we'll take our profit on that. I believe that was a trade that Connie may have placed when we were away. And we're down on a lot of these. And so I'm going to exit this trade on RTX. And on JP Morgan, our deal is if we're down 50%, we get out. Okay. So with JP Morgan, and to exit the trade, I'm going to come here to our, oh, we had two. So what you do is you're going to come here, cancel and replace, and say instead of getting out for the 453 we wanted, we're going to exit for $1.42. And so that's how we exit those. So I will go in and exit any of the long call verticals where we're down by 50%. Okay. And so today was a little different, but I think it's important to recognize when things don't go your way, and it's important to follow your rules. Even when you want to place a trade, sometimes the best trade can be, no trade at all. So guys, thank you for joining me. Have an awesome week. Thanks to James for his help in the chat, and to the guys behind the scenes. Thanks to each and every one of you. Hit the subscribe button. Follow us on X and LinkedIn, and get out there and hug someone you love. Have a really awesome weekend. Stay tuned. Lots of great content still to come your way today. And we'll see you Monday for the next episode of Trading a Smaller Account. Bye for now.